Lesson number one, and I thought this was a great way to start off because it really resonated with me the first time that I read it. And I'm going to paraphrase it. It's not taking a quote out of the book, but it's important to not only have an investment strategy, but an investment policy. Now, you may be thinking, oh, what's the difference of that? So let me give you an example of like an investment strategy. So for us, here's how we typically will position a client, or here's how we'll work with a practice owner. First and foremost, your practice is the wealth building engine, but it is not more important than your household. What I mean by that is that we need to set up a strategy in which a portion of the practice profits are transferring systematically and automatically to your household. And that's a strategy that we have. We call it our wealth building blueprint. If you want to connect with us, we'll certainly, we do webinars. We have, just have a ton of things online that you can reference to. And I'm sure we talk about our wealth building strategy as well. But the strategy, okay, what is the strategy? Okay, because I see a lot of balance sheets for practice owners. I just looked at one yesterday. And, I see someone that has, so they own their practice. They own a percentage of their building. They have money in $10,000 in I bonds. They have, like 3 different personal checking accounts. They have a Roth, a traditional. They have, some VULs that somebody, sold them. And I'm looking at it, I'm all like, this person doesn't have any idea what they're doing. They're just doing what they think they need to be doing. There's no strategy here. Okay. There's no strategy of where their money, as it comes in, it's going to help them get to a place where they have multiple income streams, where they have some prediction of what their income is going to be, 10, 15, 20 years down the line. They had no clue. It was just, hey, this guy said we should do this and we did this. Hey, we put money in our simple, or we have this is, they had no clue. You could just tell by looking at least I could. So having an investment strategy is important. Okay. Now, like I said, investment strategy would be for us would be, okay, I need to start separating out your profits. So we have you set up a separate account. We call it the wealth storage account. And then that money that's being diverted from the business to that wealth storage account then is used to buy certain types of investments. And again, in our strategy, it's usually a combination of, marketable securities, stocks and bonds, and, for capital appreciation, for income. We use insurance-based products for guaranteed income and protection of assets. And then we look at alternatives like real estate or, some other private types of investments, again, for potentially income, capital appreciation, to beat inflation, all these kinds of things. But it's a strategy, right? We set certain amounts. We kind of take the temperature of the investor, like what does he like? What do they like? And then put that strategy in place. That is a strategy. You know where your money is going before it comes in. That's what a strategy does. Okay. If you don't know that, you don't have a strategy. A policy is a rule. It's a guideline. It is saying that these are things that we're going to do. These are things that we're not going to do. And if you look at any big institution, if you look at any large endowment fund, be it Harvard, be it an Ivy League school, be it a state-run pension fund, whatever it would be, you're going to find that all of them have an investment policy statement of some kind. And we have this in our plans as well. And they're just a list of rules. These are things that we're going to do. These are the types of eligible investments that we have. These are things that we're not going to do. Okay. One rule would be I'm not going to sell out my portfolio when the market takes a 20 or 30% decline. Like that's a rule. It's a guideline. We're not going to do that. We're not going to react to what the quote unquote market prices are indicating at that point in time. We're not going to lend money to people that can't pay us back and have no means to pay us back. Like, that's a bad idea. Okay. I'm not going to invest in something just because the return says so. That's a terrible way to invest money. Okay. So you need to have an investment policy. And this is where a lot of people just get in trouble, because we've had people that have just poured money in, someone comes along with a beautiful, oh, here's a beautiful, pro forma sheet that shows this investment and this is what it's going to do. And here's historically how it's done. And, there's no other nuance to it. It's just, and, you need to trust me, and that's it. And, people have lost a lot of money. Give you an example. People that bought a ton of real estate in 2022, when interest rates were low. Interest rates went up in 2023. A lot of these real estate operators have had to go belly up. And, I've had clients that have lost hundreds of thousands of dollars, if not millions. Now, again, I didn't recommend them. I probably should have been stronger on telling them this is a bad idea. But, sometimes, people just have to have their own experience in things and kind of learn the lesson the hard way, unfortunately. But I think that is a lesson. You need to not only have a strategy, but have a policy of things that you're going to do and you're not going to do. Makes it very simple. When you talk with your spouse about, these are the guidelines that we have, and these are the things we're going to do and we're not going to do. Okay, that's lesson one.